Doing it for the team. Let's go.
Superman.
Yeah, we're back. We just got it is going to break and buffer forever, as Carol B just pointed out. So you just have to refresh and you're good. That's the end of it. We won't hear it. Now, we've got Nick Fazzari in the show. You are really, I'd like to say, the hands-on, with the developing and some of the coding. What's your take on some of the risk shit that's been going on in the market right now?
I think a lot of it you've seen. I mean, we see a lot of this stuff time and time again, right? These exploits that we've seen recently are not new methods of exploiting DeFi protocols, and especially just crypto in general. And that is concerning. It's concerning that, when in an evolving industry, when you have these problems, they should be solved right away, in my opinion. I don't think you're ever going to catch everything. I'm constantly introduced to new things from our developers every day that will throw my head in a loop around things that could happen when you get into the back end of Solana, but they need to be addressed. And I think we're doing everything we can to try to tackle that before going live, which is important.
Yeah, and I mean, there's no shortage of examples of things going wrong in crypto, and as Gunny talking a lot about the hardening of the systems and really the trial and error that has to come with it, because there's just imagine a flash loan, right? That a flash loan couldn't have existed prior to whatever it was 2021, and now it's being used anywhere it can be, where you basically borrow and then repay all in the same transaction while exploiting some oracle on the side. So what do you guys? Yeah, Rob.
You know what? Like, before we even get into that stuff, let's just look at the whole pie here. This stuff is not unique to crypto. I mean, there are issues in the derivatives markets and markets in traditional finance, just as much, if not more, than crypto. So it's more just really derivatives markets issues that are being solved. And, we happen to be doing this in the crypto space. But I mean, some of the traditional market issues are like even bigger headlines than crypto markets. We saw recently, a major fiasco at the LME with the nickel market. I mean, like, a very big commodity market, and saw basically the market broke and was shut down. Many market participants.
I mean, why do you explain it to people?
Yeah, go through the nickel.
Yeah, I mean, it was the bottom line is nickel is it's a big commodity, right? It's produced by different commercial entities globally. China is a big market, and nickel is used in many industries. So they trade nickel at the derivatives exchange, and basically, I mean, for the simple version, one of the biggest nickel producers, who obviously they manage their risk and trade on the derivatives exchange, because the derivatives exchanges are where the most liquidity is to transfer risk and move risk, which is why derivatives markets are so enormous, because they're basically the liquidity touch point for all underlying assets everywhere. So the more stuff that is created and mined and produced in the overall economy, the more derivatives markets are needed, and more liquidity and volume trades there. So basically, this one producer had a pretty sizable short futures position, and he was either hedging their physical position of nickel that they're producing, or he could have been over hedging or even speculating, because the commodities markets had really heated up and had run a lot higher. And basically, the nickel market at the LME ran up his behind very quickly and forcefully, and he could not cover his margin call or his margin account, and they actually busted trades, which means they stopped the market and they canceled every single trade that occurred in nickel futures from the time they froze it from before. And at a certain, they're like, okay, anything above 20,000 canceled, where, you know, if you think you made money, you didn't. This guy who was out, I mean, he was in the hole, several $1 billion.
Jesus.
He got to kind of, you know,
Can you imagine? Right. Imagine being on the winning side of that trade. It looks like they're being sued right now for $465 million. I mean, no kidding. That's brutal.
Well, because what we all know as pro derivatives traders, you're trading stuff against a lot of other stuff. Like this whole global basket of risk it's all composable. You know, liquidity providers out there, when they see things and markets get out of line, they might hedge. You know, I mean, the simple example is like people who hedge single stock risk against like an S&P index of risk and vice versa. So, I mean, people who are maybe getting short or getting long nickel were maybe selling other metals or other commodities against it in a basket. And now they're making trades knowing and trusting the exchange that the trades they're making are true and you know, immutable, but that is not the case. So, I mean, the bottom line is like derivatives markets are huge, they are complex, they are basically continuous, and we're solving problems in the overall derivatives market. It's really this isn't a crypto thing, but on-chain derivatives bring a lot more complexities. It is a different underlying system. So
entirely new.
And
in this
a lot
case.
of times the on-chain nature of not being like instant settlement, not going able to go back is one of the things that skeptics will point to. But to Rob's point, you have a situation here where someone is making that decision and could have costed traders a lot of money. Like it's not just profits they would have made or they thought they made that they didn't. Like Rob said, if they're hedging those trades against something else on a different exchange, and that those trades on that other exchange are good, they could be down huge because of these decisions that the LME made. So both have issues, and you know the question with this situation specifically is, you know, should the LME have done that, or should any centralized entity have the ability to do that?
Yep.
I mean,
Nope.
And yeah, like you shouldn't have a system where you need to do that. Ideally, right?
That's the solve. Is you shouldn't need that, and really what that comes down to is you know, some of the things that we're working on now. It really comes down to a question of somewhat radical transparency around risk of individual accounts, and around like the overall health of the exchange, or like in the case of something like Hxro, in the overall health of the network. And as that's happening in real time, you can measure the health of everything. You can see, like, you know, accounts if they're getting out of control, and also you have real-time liquidation engines. So when all of those decisions are embedded in code, it makes things a lot easier. Now, it's a tricky thing to solve, but that's the whole point, is like, you know, as you harden these things, it gets better and better. And then the other thing too is that with smart contracts, you also can build in protections that will prevent things like, you can build in credit limits, you can build in market maker protections, customer protections, things that can basically prevent people from doing something stupid to themselves and from doing something stupid that can potentially harm the exchange. Like, people don't understand, you know, because if you're not kind of deep rooted in the clearing and exchange end of the industry, like in tradfi. I mean, last year, I think in 2020, you know, Eurex, which is like one of the biggest clearing entities on the planet, they clear like German Bund Babel Schatz and some big European, German, the DAX, things like that. I think there was close to 4,000 separate margin shortfalls that actually never saw the light of the day. They just got eaten by firms and by exchange members. And those are the types of things that, like, one out of every X number of them metastasize into a systemic problem. And really what we're here to solve through all of this is to build an incredibly robust risk engine that can eventually take the levels of liquidity that you need to really have a super robust market across many derivative contracts, but also to create this lane using DeFi to have the right amount of transparency. That this kind of goes back into, and I don't want to go down this path yet, but it goes back into a lot of the shit that like SBF was putting out on Twitter yesterday about his thoughts around regulatory. And like the things with DeFi is like we have to get it to a point where regulators see the benefits of the transparency that comes with having like settlement and finality and risk on chain. The fact that you can do it in near real time, the fact that you can have it exist in a way that is like this, like basically that information becomes public and it's in near real time. Like we should talk about Archegos. We can talk about long-term capital management, which was like 20 years ago now, but like these are such relevant things. Like the fact that that long-term capital management happened, and a couple years later they came out with there was legislation that came out that kind of modernized the commodity markets, quote unquote. And then again, like 20 years later, you have an Archegos type thing happen in the equity markets, and then in 2021 or 22, you had the same exact thing happen in crypto. It's like, for guys that came from TradFi, they know that, like, you see, like, that to me is why Do Kwon is a bad actor. Like, megalomania aside, like, the things that they do are the same things that Bill Huang did with Archegos. Like, you went and you took advantage of a loophole that in the traditional space of a serious lack of transparency and serious latency and information sharing around an end client's risk. This is a $10 billion fund that went and basically put like what we call in Chicago the O'Hare trade on, which is basically like get as long as you can, max out everything, max out all your credit, and buy a plane ticket to leave the country all at the same time. Because if something goes wrong, you're gone. And they also call it in the crude oil markets, they call it the Texas hedge.
Imagine the sweat.
Where you're just long everything.
Everything, and then you're getting on a plane. Oh my god.
They're taking advantage of antiquated technology. And what somebody like, something that happened in Terra Luna, like they were taking advantage of nascent systems that are, but like the problem with those systems is, I think historically we've lacked teams that, like, again, now we're going to blow our trumpet a little bit, but whatever. That really had the right level of experience in TradFi to know what was broken in TradFi and how you can build in DeFi to help fix that. And that's why we brought the teams together that we did with Hxro, and like why guys like Nick are here and guys like me and Rob, and why we brought Jump in and Susquehanna and all the, like, these are discussions that we have throughout this process, and like they're just things that like the end user, you don't want them thinking about. You don't want them thinking about market maker protections and customer protections and open interest limits and like why you don't do cross collateralization without a proper risk engine. And like there's just these things that like you shouldn't have to think about as an end user that we're here to build. And ideally that is the whole ethos of Hxro. So like if we can build these things, make them robust, bring the right teams around it, and go to like regulatory bodies with some level of like, look, we've created these principle-based rules. We've encoded these elements that we know in TradFi work. They should work. and they especially work well when there's real-time risk around things. And now you can apply that to the, you can apply that and now have a chance and have a pathway to have really constructive discussions with legislatures and start setting things down a proper path, as opposed to having this like kind of anarchist level war, which doesn't make fucking sense. So
question just popped into my head as you were talking about, like, do you think that the nickel LME, the guy, whoever it was getting blown up and they had to basically reverse it because he was too big to fail, whatever that was, do you think that they had that feeling? Like they put on that risk basically saying, worst case, they're going to have to roll it back because we're going to crush the whole system. Like, do you think there was a level of cahoots there, a little bit of that?
My take is that it started as a hedge and then went into like a kamikaze pilot situation. But
that is the thing about, that's the thing about
too big
markets.
To fail.
The problem with markets, and I've learned personally, I think all of us have kind of learned personally, but there are times when markets move a lot farther than we could even imagine they can move. Like, it's like even the biggest producer of nickel was like, there is no way the price of nickel is going to go that high. It's just no way. And even if it does, then I'm the biggest producer of nickel. I'm going to be so rich, but it doesn't work that way. He literally could not cover his account. So yeah. I think that when you get moves that are 5 sigma, 6 sigma, crazy,
GME level.
Yeah. I mean, it's that tends to be a problem, but also he probably just never even thought that he could get taken out, period.
Now, to go back to something Gunny was saying on this, which is really interesting, is I think it'll be hard in on-chain markets when you're talking about leverage to get down to the cost of capital that you have in like on centralized exchanges in a centralized world, because A, of the transparency and B, of basically all these safeguards that are in place to prevent things like that. And that begs the question, like, is that a worse outcome? Or another way to look at it, and the way that I look at it, is in these centralized systems, are you taking on systemic risk that's not kind of like in your risk model, that's not there, because the cost of capital is artificially low. So if the whole system is prone to this, and there's basically margin and the traders aren't, basically everyone isn't charged enough, and that's what's causing this shortfall, are you taking on that risk? And I would argue all these situations show that is the case.
Now, let's talk Hxro Network. What are you guys doing in your design process, Spandex being the risk engine? I mean, we've got the problems. What is the solution?
Nick, do you want to start on that, or?
Sure. I think in the design of our risk engine, what I'm most proud of, and I think what will differentiate us over the long term, is our portfolio margin calculation. When people start trading on it, and when you look, even compared to something like CME's system, you'll see that your outrights versus if we're just talking in futures world, your outright positions, your outright deltas versus your spreads versus your butterflies have risk require margin that's pretty rational, in every case. So, when I say pretty rational, I mean relative to one another, those positions have the margin that you'd expect them to have. And also that means, it's none of this is extending, 20 to 1, 30 to 1, 40 to 1 type leverage, but also it's capital efficient enough so that you're not being charged or overcharged, let's say, in terms of how much capital you have to have these positions. Also, the amount of capital you need to post for all these will fluctuate with volatility and events in the market. So situations where, in kind of like the old bank VAR system where that standard deviation is calculated completely off historical lookbacks, and then you have situations where you have a situation that has never happened before, and then going forward you're like, oh well, we have to account for that. I mean, in CME's model, how many shocks are there for their first situation that happened 25 years ago that you have to run the scenario analysis for? And it's like, all right, is that really what we're trying to solve for, or should we be kind of solving for the next one? So that's an interesting part of it, but that's none of that is what I really want to talk about, because I think, especially in light of recent events, the what I would call like the hardening of the system and removing the ability for any of these exploits that we've seen kind of over the last, let's say, 2-3 years to happen again and again are way more important on the surface. Like that sophisticated margin calculation and the modeling that went into it is not, like, no one's going to care. And I keep telling I tell our developers this all the time. Like, no one's going to care if we don't solve the exploit problems that we've seen first. So I don't know if Gunny, do we want to go into some of those?
I mean, I think you can go high level, just, you don't want to open ourselves up too much, but on this particular element, but I would talk a little bit about it. Sure. Give a little alpha to the people that are here.
Sure. So I think at first the capital blocks we have in place as we test everything out are super important. There's a walk, what is it? Walk, crawl, run. kind of approach that Hxro has taken, and I think it served us well. I mean, there's a frustration sometimes about time to market, but when you see kind of the things we found out about our own system, even in working with it, in waiting a little bit to solve those first, is in the best interest of the end user, for sure. One example is right now we're only taking collateral in USDC, right? So some of these issues where the Oracle price might be manipulated on something on a coin that you have it at a DeFi exchange and is being used to calculate the margin you have to trade with. Someone would have to manipulate the price of USDC, which at least
not as easy as Mango or any other smaller coin, obviously.
From a liquidity standpoint and from the mechanism which it is held in place, very, very, very unlikely. And so that's just one example of that. Other ones are, our settlement methodology. We moved from for settling futures, we moved from a point in time calculation of what that settlement price is to an exponentially weighted moving average. So that, someone trying to manipulate the price on whether that's an Oracle price or a price in another exchange, instantaneously will not cause our futures to settle at ridiculous prices one way or the other. Those are just two things that we've put into place. Our mark price methodology works very, very, without going into it, it works very, very similarly with multiple Oracle inputs, and again this smoothing function that really prevents the type of exploits we've seen around mark price, where someone will have a position and drive the price of a derivative through trading to a certain price. That's where it's marked, and then they withdraw a bunch against that positive P&L, and then everything comes crashing down, and they abandon the other wallet that they had that they were trading on. And so we've really spent a lot of time to put, those are just 3 examples of things we've already done. And I think there's 5 or 6 that are still on the docket that we will push forward and release before even removing the capital blocks.
Yeah. So those other things, those go back to like what we would call like just general economic protections around risk and around the network itself. Like you have to get to a state where it's not just like the average, the regular user or like the apps that are building to Hxro who have to rely on us, like that our risk engine is robust. You got to get to a state where they can trust that the code that is running these risk engines is working as intended, and so it just constantly has to be stressed and we are taking our time on it. It has to be done this way because we're trying to think about this like, we want to see what this looks like in 3 years from now, and 5 years from now, and 10 years from now, so you can really make long-term sustainable impact. And to do that, these are very sensitive. Like without a robust risk engine, which we believe we're going to build the most robust risk engine that ever existed in on-chain derivatives or ever will exist. That is like the first step to getting real liquidity. Definitely some of the ways that we built dexterity with the ability to do spreads and kind of interlinking different term structures. That is another big thing that doesn't really exist today, that trying to really develop liquidity out the curve. These are things that, coming from tradfi backgrounds. I mean, Nick was at Citadel for several years, which is probably one of the foremost best firms on the in the world in terms of how they think about risk. My background in prop, Rob's background in prop, I've spent years dealing directly with exchange operations and just like internal trading operations, and you get all these things work in tradfi, and there's some things that exist that are very useful that you have to solve on chain, and those are some of the challenges that you go through. And then there's things that are complete garbage that you got to rethink how those work. And bringing that all together is exactly what's happening. So.
And some of these are known closed form solutions, and it's really just implementing that on chain and putting the math on chain. And then there's some other stuff that is that's really not answered and takes a lot of research. And I'll give one example I was thinking of when Gunny was talking about kind of the difference between your tradfi markets and real-time settlement and everything in crypto is in real-time liquidations. Most exchanges in tradfi up to this point have once-a-day settlement. Some have twice-a-day settlement, and there's situations where between those settlement periods, a trader can have put on kind of ridiculous risk, have P&L swings up or down. And you see this time and time again. And as long as by the end of the day, when settlement happens, they're fine. Now, usually if they're at a bigger firm, that this will be monitored in real time, and they don't have the ability to do that, but that's not always the case. And it's obvious that let's even say twice a day settlement, because of that reason, is not often enough. And then take the complete other end of the spectrum when you have real time liquidation is in some crypto markets is, if a mark price is ever at a certain point that is irrational, someone could be liquidated on that because of a point in time price mark. And is that instantaneous situation, you go from twice a day to instantaneous, that doesn't seem to make sense either, which is when I go back to some of the smoothing that we were talking about in our mark price calculation. So finding what is in the middle and what makes sense sometimes is more art than science, and we're doing our best to turn it into a science.
Yeah, awesome.
What's coming up next? Right now, you've got sort of this high level thing you're working on with the risk engine and all that, and we're starting to move into like Open Hero. I know launched already on the network. What can users look forward to, get their hands dirty? I know you're still kind of working through the beta. Maybe talk to us a little bit about like what would help support. I know there's a lot of community members sitting in the Discord, a lot of them traders. What can they do to get their feet wet, so to speak, and really push that beta forward for you?
I think if you're like what we call a point and click trader, like a guy that's using a UI to execute transactions, like go use Open Hero. There's a couple other apps that are building to Hero now. There's an RFQ app, and then there's a DOV that's building to it that's going to do base liquidity. Get in and start, even on micro lots. Just get in and start trading, and then get into the beta feedback channels in Discord and talk to us. And the devs for Open Hero can listen, or we can forward on info that you have, like feedback for their UI. But really, it's really to talk about, and for us to test risk, and that this all is dependent on having a hardened, over time, it's not, a hardened risk engine that then we can comfortably scale. And it's just like starting it's almost like starting an L1. Like a Hero effectively is like an L2, risk, settlement, finality, liquidity engine. And so we have to keep developing that. And I think the earlier you can get there, the better. There's going to be a lot of education around how, different ways that I would say more the pros and semi-pros look at the markets and trade, like around spreading and things like that, we're going to do a lot of community sessions on that. And then also if you're an algo trader, an automated trader, get in and support a plugin through one of the APIs and just start posting markets and trading around. It's just the best way to really get things going and to get your hands dirty on this and be a part of it early, which we're rewarding. And then
talk to me about that. I've heard the buzz about this reward stuff, community engagement. You and I have discussed it before. Let's share it with people, like specifically, what do these community engagement kind of rewards look like? What can you share with that?
Yeah, no, I can talk a little bit about that. Seeing that the audience is, I'd imagine the people are here are hardcore hero guys.
The heroes have arrived.
Small group.
The immortals.
Yeah, the immortals, exactly.
Immortals.
So first, we'll take a step back because I think we got cut off. We can talk a little bit about staking. There is an early staking, bootstrap rewards program going, a supplemental staking rewards going to really try to increase early adopters stake weight, giving them a chance to kind of build their stake weight in the network so they can which will eventually relay into having a bigger voice in the ecosystem. So once if you're staked now, so the founders actually so like me and Rob, we committed initially, we're committing 100 million Hero to the network through some different programs over time. But this is a 10 million Hero program that will reward in esHXRO, and it's basically taking it's 12 epochs of 833,333 esHXRO that very simply at random every 2 weeks. So the first one will happen sometime between October 15th and 10/31. There'll be random one snapshot taken every 2 weeks for 12 epochs, and based on your stake weight, you're going to be distributed a pro rata share of that 833,333. And so I think as a first step, if you are staked with Hero, the earlier you can stake, obviously the the lower the denominator is going to be in terms of the effective network stake weight, you should be able to share in that reward. Step one, and then obviously you can go see our docs like of how all the stake weight stuff works. Yeah, so I mean we're almost at 25 million. That's great. There's also another 100+ million that is not there yet. That's coming in locked Hxro from from past. There's lockups and stuff that
vested tokens that.
Like from this strategic round that we did a few months back that has some lockup terms to it. So those will go in, with various lockup periods, and that number is gonna jump to a couple hundred million of effective stake weight pretty quick, I think. Go ahead, Ryan. Were you saying something?
No, I was gonna say I'm looking at the screen. I wanted, maybe you can go into like my favorite feature. It says their average stake duration, just how how when you stake for longer, you earn like a really large boost to your stake weight. So maybe you could talk through that little that top line there.
And I can demo that here. Yeah, you can input and try it before you stake. It's like 1 year and 69 days.
Yeah, so if you typed in there,
Yep.
if you just typed in 3 years, you'll see that multiplier jump, right?
So there's your max, right? 4x, and so that's what you mean by stake weight. So I'd 4x my weight just by committing to the 3 year.
Yep, you're locked. You're locked in for
So
3 years. Go ahead, Rob.
Yeah, no. So like if you had 100,000 Hxro that you wanted to stake, and you staked it for 3 years, so it's locked for 3 years, but you're getting the equivalent of staking 400,000 Hxro. So you are getting 4x your share of reward. So at the top, you can see on a network level there, the average is 1.91 years. So that is about a 2.91x boost to the overall pool. So you can see the actual number of Hxro that's staked is just under 25 million, but the effective stake weight is 72, almost 73 million. So people are, you believe in the network, you want to be a long-term network participant, you can get rewarded as such.
I was close. I was trying to estimate exactly how many days on top of that year for 1.91, but it's 332. So the average stake weight for the network is about 2.9x. That's not bad.
Yeah, and you know what? Like the beautiful thing about Solana, Solana DeFi too, is that it is so elegant and so cheap that strategies where if you want to do the 7-day minimum stake, the strategy to automatically restake and just continuously restaking, it's cheap. You're not going to get taxed with gas fees and all of that. It's really like Solana DeFi when it is in all of its glory. It is really, really great, and I think people are going to start to see that with programs like this.
It's so crazy to me that it really hasn't been captured yet. Like I think just as on a side note, I mean I have so many friends, and I'm in chat groups that is some fairly large DeFi traders, like DeFi whales, and it's like shocking how many of them never actually used Solana, and now they've like crossed over, and they were immediately like, "Holy shit, this is fast."
That was like Messi the other day tweeted out. He's just like, "Okay, guys, I finally went over to Solana, and holy fuck, it's fast." Like if they figure it out, and it is. I mean, Open Hxro, I click, it's like, "Oh, approved, done, confirmed," and you're long, and I'm like, "Oh shit."
It's crazy.
It's
and then actually,
central.
You actually use a Soulflare wallet for that. You can click, so you don't have to actually do the additional approval.
Yeah, I haven't set that up yet, but I do plan to once I get into the grease here. So LHxRO coming, about 100 million coming out, 10 million in Hxro as boosted rewards, or excuse me, esHXRO, escrowed Hxro. How do I unlock those? And I'm going to give you an example because I've only ever heard of that from GLP, GMX, that kind of stuff. And I get all this, and I looked on my Zapper the other day, and I had this. I was like, oh man, I got some money in GLP or excuse me, GMX. And I looked, and it's a whole bag of ES GMX. But then I went to like start vesting it, and it's like, excuse me, sir, please deposit a whole fuckload of GLP, or you can't have this. And I was like, I don't even have that kind of money anymore. That was like last year bull market shit. Like my escrowed GMX is never coming out of there unless unless we get another bull. Is it similar? Is it the same? What have you guys done differently? What have you done the same?
It's a little easier. You don't have those additional layers and requirements around it.
Thank you.
So you get the reward, and it's very simple. You have two choices with that esHXRO reward. You either restake it, and you restake it as esHXRO, or you claim it, and if you claim it, like some or all of it, it'll go into a claiming vault, and it'll start unlocking 1/365th per day as regular hero. It's all backed 1-to-1. So for every esHXRO that it's not inflating supply at all, just to be clear. It's, if there is 100 million esHXRO rolling around the ecosystem, there is 100 million native hero, or wormhole wrapped hero in case of in the case of what we're doing with
technicalities
Solana.
here.
But it is all backed fully backed, fully collateralized 1-to-1. There's no concept of like of hey, that's like 70% like LTV or something. Yeah.
So I put it into the claim. It starts its 1 year vest. Obviously during
dripping.
that,
every
during
block
that,
it'll just drip.
yeah, and during that drip, there's not getting any staking rewards because I decided to claim and not stake. That's fine, but there's no other requirements. I can say, you know what, I'm done for a little bit. It's going into a bear. That's my prediction. I'm gonna just vest and get the fuck out. Like, that's essentially what you're saying.
Yep. Wait. So, somebody was asking a question about rewards settled in USDC and how often. Yeah.
Oh yeah.
But sorry, what was the question? I'll get back to that.
No, basically, I was just reaffirming what you said. Essentially, what I'm giving up to claim my esHXRO is simply the staking rewards I would get if I otherwise staked it. But I'm not needing to go and deposit my minimum or any other crap. Like, it's just give me that stuff.
Right.
Correct.
Yep, that's correct.
Okay.
So the other note, just somebody in the chat was asking about staking.
RL Tibble, my guy.
RL Tibble. Yeah. So, to put it simply, the only thing that has locking impact on rewards is anything that's hero. So any rewards that are being that you're earning in hero will be received as esHXRO, and then you'll have to make that claim or stake or do nothing, which doesn't make any fucking sense. But you'll have to do that. You have to make that decision as you're receiving it at some point. And then, but everything else. So, for example, the 50% of every transaction fee in the network is getting paid, at the outset, getting paid to stake token holders as we move deeper into community-driven governance. Obviously I'm sure there'll be proposals to kind of change the makeups of things. Hopefully for the greater good of everybody and not to be pig-headed.
Not the 1% who gets all the voting stake weight. No.
Yeah,
but
exactly.
the longer you lock, your vote weight goes up too, right?
You get that multiplier effect on that stake weight effectively doubles as governance weight, and then there'll be some other elements worked in there that'll help make it so it's not just like all the big bags are the ones that are controlling it. So, but the important thing here is that if you stake, regardless if you stake 1 week or you stake 3 years, the USDC that you receive as a reward, because you're earning 50% of every transaction fee in the network, and if we're on USDC collateral, the trading fees that are being paid are paid in USDC. There's no lock on that. Like, that is USDC that is yours in your wallet, and you're earning that pro rata. So if there's $1 billion of notional volume traded for the day, and you think like, okay, we're on like a 0 and 5 maker taker model, it's going to be, $250,000 of USDC network fees that are getting paid to the network. 125,000 of that is being distributed to the network pro rata based on your stake weight throughout the day. So every time a crank's run for it, it's getting paid out. And that is like, and then you can take that and do what you will with it. Go buy more hero and restake, or go buy, go buy a purse for your wife. I don't know.
Now that kind of modeling can be tricky to do. It's not something, we talk about very often, but if you want to go check out Blockmates, they've put up a few guides, and one of them was talking about the idea of this, fair market value. That goes well beyond the scope of this show, but I just want to point people towards that. They did some playing with, what if this was the volume? What would this amount of stake earn and all that stuff? Pure speculation, no guarantees from management, but this is interesting conversation to maybe extend over on their site, because we don't really like to talk about price or anything here. But if you're interested in that, check out Blockmates. They do great work. We love them. In fact, coming up right after this show, Gunny, you're going to be on with Jedi Blockmates. Do you want to talk a little bit about that, what we can look forward to over the next hour?
We're going to go, I'm just going to go pop into, we did a stage last week that went pretty well. And I'm just going to go and hop in and shoot the shit. And, and kind of, we can do like a post show forum. Anybody wants to hop in, come in the Discord. You're already in the Discord. I'll be up on one of the stages, and you want to come talk, and you can come up on stage, and this is your project, this is your community. So, love to hear how you want to get involved, or questions that you have, gripes that you have, things you want to see. You want to talk about hockey or golf or baseball? I'm there too for that. If baseball, I'd probably
Leafs are on tonight, but I don't want to come talk about them just yet. They need to win first round of the playoffs first.
Right.
Final thoughts. Let's go around the table here. It's we are getting up to that sweet spot near the hour. Nick, you've been talking a lot about risk. We zoomed out, talked about the systemic risk that exists in TradFi crypto, what you guys are building to alleviate a lot of that. Do you have any kind of final thoughts on our risk session, which is your special day today? You're in here grinding with us. What's on your mind?
No, I think everything that's happened in the market, I think one of the cool things about it is that it was so transparent. Some of the other examples that we talked about in TradFi took months and months of lawsuits to figure out, and because everything that happened recently is on chain, within minutes, there's Twitter threads.
Within 12 minutes, yeah. Somebody on Twitter's figured it all out.
And that's a testament to what transparency can bring to the market. So on our end, we'll keep grinding away, chewing glass, as the Solana folks like to say, and we'll get after it.
Beauty. Well, I'm looking forward to it. We get you on here every other month or so to give us some of those more technical updates, and I always learn something new. So thank you for coming today, spending your time with us. I'm sure you have some itching problems that are just, you want to go solve, but you took the time with us. So thank you. Rob.
Yeah. No, I mean, bottom line is I fully believe we're working in the most exciting space, that exists, and markets are so critical. Liquidity, risk, it's such a big part of, everyday global economics that I think that there is a lot of room for improvement. I think what we're doing in DeFi, especially, it's an inflection point, and there's a lot of low-hanging fruit that can be improved upon, just with settlement in general and among other things. But just couldn't be more excited about this space and about the brilliant people who are actually building here. So it's good stuff.
Beauty. And Gunny, why don't you take us home?
I feel like I hogged so much of this.
You did touch on a lot, so let's just leave everybody with a look for. What is the thing on the roadmap that excites you the most in the next quarter, going into the end of the year?
Oh God, more than anything, there's a few things, but we've been grinding so hard as a team. Our core contributors, which is not just us, but some engineers from Solana and Jump and all these other firms that all came together to build this. To actually see this, the first step was just seeing it come to life and actually seeing it in a lit market is really cool. But to start to see these things take effect, and some of the teams that are coming in to connect at the app layer is going to super excited to see all that and share all that. Me personally, I feel like I'm on a greater mission, to really help establish this DeFi lane, and figure out how to seam this together with the rest of the world and not have it be this combative kind of battle that's going on, and kind of being, I guess, an elder statesman in the industry at this point. Feel like I feel like it's part of my mission to help make that happen. So I'm super excited about that. And then just in the in the ecosystem as a whole, first of all, I'm excited to eventually get the fuck out of this bear market. It feels like it's weighing on everybody, and it's so quiet. But these are the signals that we get that we are in some area of bottoming, and we talked about this many times before. So that's always a good sign. But the things that we're going to be doing in the ecosystem that are kind of outside the scope of just this traditional kind of hardcore infrastructure work that we're doing, and it's so great that we've found a model through DeFi to let the community and the participants benefit from it. It's kind of like this return to the old exchange days when it was member owned, and now you get to distribute the benefits of all that to anybody who's part of it, which is really exciting. And that is something that does not exist in this universe right now, and that's cool. But then even more so, we're going to be incorporating some really interesting NFT things and some gamification things around the network itself that are people that are really going to help kind of level up people's involvement. That I think is actually using some interesting things from the innovations that are happening really specifically on Solana, with some of the teams like Cupcake Protocol and Raindrops, Lollipop, things like that we're going to start weaving into our ecosystem to really help bolster the kind of intersection of all these things, all these cool technologies, and really make what is stuff that is hyper interesting to guys like me, Nick, and Rob, because it's our lifeblood, but really help get the rest of the world involved in it through ecosystem based gamification and NFTs and things like that. So I'm really excited to start rolling that out. We'll talk about that more. We're going to try to get it together. We're keynoting at Solana Breakpoint this year, and maybe do a rollout about that there. But
brings back memories. It's been a long year since last time.
Yeah, it sure has, huh?
Yeah, it's a lot's changed since last time. I'm hoping I can make it out to Lisbon, but I'm not too sure this year. However, thank you for that final thought. We got to get going, guys. It is top of the hour. I'm sure we've all got some stuff to do. So for everybody else watching, tune in to the Discord after the show here. Gunny's going to get in there and get into the grease with you. Anyone can jump up on stage and ask questions, along with blockmates. And Tuesday, we'll be back live, I believe, solo stream, but we'll double check and let you know on Twitter. Till next time, guys, whatever you do from now until then, always play from a position of strength. Take care.